presenting the results to you. We unfold the Q3 results. Some of the features of the results. Global business increased by 11.2% to 9,41,468 crores. Global deposits have moved up by 13.3% to 5,48,531 crores. CASA deposits have increased to by 14.3% to almost 2 lakh crores. CASA share is at a very strong and healthy 40.38%. Net advances, global net advances have increased by 8.4% to 3,92,937 crores. Share of small ticket, which has been a strategy shift of the bank, has reached 60.3% of domestic non-food credit. Operating profit has been robust at 2,918 crores with a growth of 6.1%, and the NIM has been at 2.87 for the 9 months and 2.75 for the third quarter of FY16. This is a global number. On the profit front, the interest income for the third quarter has been 12,221 crores, which has grown by 5.2% year-on-year basis. The interest expenses have been at 8,101 crores, a growth of 9.8%. This is due to the growth in deposits being at 13.8% and the growth in advances. The earlier number was at 8.4%. The NII is at 4,120 crores, which is a small decline of minus 2.7%. Other income has increased by 1,671 crores, 29.4%. Operating expenses have shot up by 3.6%. This we have been able to keep in control at a small growth of 3.6%, which is 2,872 crores. Operating profit, again, in the given circumstances, given environment, has been very robust at 2,918 crores, a growth of 6.1%. And the provisions, 2,867 crores, and net profit is at 51 crores for this quarter. There's a dip of 93% compared to year-on-year basis. On the provisions front, about 3,677 crores have been provided for non-performing assets. There's a write back from the standard category, 392 crores. Depreciation on investment has been 123 crores and others has been at 277. I'll also place before you the income breakup. The interest on advances was 8,881 crores for this third quarter. Interest on investments 3,119 crores and other interest income 220 crores. So the whole interest income together is at 12,221 crores. The other income component is generally the fee-based income, which is at 825 crores. Recovery in return of accounts 519 crores. Trading profit 233. Dividend from liquid mutual funds 75 crores and others 21 crores. A breakup of the expenditure indicates that interest paid on deposits has moved up by 7.8% to 7,534 crores. There has been moderation in deposits. As I mentioned earlier, the CASA has moved to 40%, 40+%, and the management has very, very consciously worked on reduction of bulk deposits, which is a very, very nominal figure now, and that has helped us in kind of reducing the cost of funds, which we will see later. Interest on borrowings was at 35 crores and others 532 crores, which include the servicing of the interest on the bonds and the 81 bonds which have been raised during last year. So the total interest outgo has been 8,101 crores, which is shot up by 9.8%. Establishment expenses were at 1991 crores, a dip of 1.8%. The AS15 provision has been 747 crores. Operating expenses, other operating expenses 881. The total expenses were 10,973 crores, an increase of 8.1%. Some of the ratios I would like to place before you. The cost of deposits has dipped to 5.81%. As I said, mainly due to the improved CASA, shedding of the bulk deposits, and we have almost done 7 times reductions in the term deposits at various tenors, because the term deposits have been really raging at a very high percentage, and given the environment of deployment, so we have moderated the term deposits with various revisions at various points in time, which has helped us maintain the cost of deposits. Cost of funds has been at 4.9. Yield has come down 9.47% because during the 9 months we have reduced the base rate by 65 bips. Once in May, 25 bips, and again 1st October, 40 bips. That makes it 65 bips during this financial year. Yield on fund 7.39. Net interest margin has been 2.75%, and this is the NIM globally. We have the domestic NIM at 3.13. The domestic NIM has been at 3.13, and the global NIM has been at 2.75. And as I said earlier, a very, very conscious decision to reduce the bulk deposits has resulted in the share coming down as low as 0.53%, and the cost of deposits reducing from 6.82 over a period of time, over 3 years period, coming to 5.81%. The profitability ratios, obviously all of us know the net profit dipping to 51 crores. The return on assets has come down to 0.03%. Return on net worth is at 0.5%. Cost income ratio is certainly comparably less compared to last year at 49.61%, showing a decline. Establishment expenses to total expenses 18.15. The book value per share is again 207, and it's trading around 90 rupees now. And the earnings per share is at 1.08, mainly the net profit getting flashed to 51 crores, plus the number of shares getting increased with the infusion of capital, which happened end of September 2015. On the business front, we have the total business at 9,41,468 crores, which I mentioned earlier. The overseas business contributes to 12% of the bank's business, which is at 1,14,267 crores, an increase of 13.4% over the comparable period last year. The total deposit for the bank was at 5,48,531 crores, and the advances at 3,92,937 crores. The CD ratio has been kept at 71.60%. On the deposit front, further breakup of deposits tells us that the overseas deposits were at 58,437 crores. Domestic deposit 4,90,095 crores, with a moderated deposit growth, as I mentioned. Current deposit at 36,462 crores and savings at 1,60,460 crores, a growth of 12.5% over the comparable period last year. The CASA share has been at 40.38%. The term deposits have been moderated to be at 3,50,610 crores, and the share of the differential rate of interest deposits has been 0.53. On the advances front, the global gross advances of the bank was at 4,05,210 crores. The overseas advances was 55,830 crores. Domestic gross advances 3,49,831 crores with a growth of 8.1%. The domestic non-food gross advances was at 3,42,506 crores with a growth of 8.3%. Agriculture has, the portfolio has grown by 13.2%, industry 12.5%, and the MSME 8.4%. The retail loans has been growing at 17.6%, as I mentioned earlier. The shift happening to the small ticket loans and focus on them. Housing by 16%, housing by 26%, cars by 17%, and other retail loans by 11%. So the mention on the moving through small ticket advances has really given us an edge over, in improving the portfolio. We have moved to 60.3% as at this quarter, December ending, constituted by agriculture, MSME, retail, and these constitute the small ticket loans for the bank. On the industry-wise breakup, we have, some of the main sectors mentioned. Food processing up by, 21%, because there's a lot of offtake happening on the sugar sector, and some new food processing units coming into being. Textiles have grown by 13.8. The iron and steel is at 19.6. It is not by new lending, but because of certain due date defaults and other things happening, which get added to the portfolio. We have the other sectors like vehicle and vehicle parts registering very nominal growth, and paper and paper products, which is at 17.3% growth. The bank has quite a strong exposure in areas like Uttarakhand and other places. On the investment side, the gross domestic investment was at 1,62,532 crores. The total SLR portfolio being 1,28,561 crores, and the SLR percentage worked out to 26.75, which is down from 28.17. Slowly but surely there is a shift happening, downward shift happening on this. We move on to the breakup of gross credit as per asset class. The standard advances at 3,35,868 crores constituted 82.89% of the advances. Standard restructured book was at 35,004 crores. The NPAs at 34,338 crores. This is the breakup. NPAs at 8.47 and standard restructured at 8.64, constituting 17.11, and standard advances constituting 82.89. When I look at the sector-wise and the restructured accounts, we have certain sectors like agriculture with 252 crores, housing 0, real estate 44, industry constitutes 32,730, of this 35,004 crores which I mentioned, and others including some MSME and other units altogether constitute 35,000 crores. On the major industries, if you look at, iron and steel has a share of 17.1%, infrastructure 45.1%, power 37.1%, and others very nominal like sugar 3.9%, manufacturing 2.9%, and very nominal held by others. Now we come on to the non-performing assets numbers. At the beginning of the year, we had 25,695 crores, and whatever number I'm going to mention, it is for the 3 quarters, and I'll give you separately the third quarter number. Cash recovery has been 3,357 crores, upgradation 1,630, write-off 5,076. The total reduction has been at 10,064 crores. Fresh additions were 18,707, of which fresh slippages were 17,655. Debits in existing NPAs was 1,052, and the gross NPA at the end of the period is 34,338. Here I would like to mention, the industry is going through very tough times, and PNB has been a long and a large player, mainly when it comes to industries which are in the tight spot today. PNB has been one of the major lenders, and obviously the impact is felt on the bank. So the bank being forefront of the industrial loans Today, the impact is very visible on the bank at the bad times. Gross NPA for the period, as I mentioned, was 34,338 crores. The percentage works in net NPAs with 22,983 crores. The percentage is 8.47 gross NPAs. Net NPAs 5.86. Certainly, this is no comparable number with any of the previous quarters or the previous times that we have had. But you must also look at the bank in the context in which it is placed. So it is not, it's not in isolation. The entire industry is passing through tough times. So, and all of you know that we have also have to take, we have also to go through the AQR by Reserve Bank of India, which we have done diligently, and the appropriate numbers have been taken in this classification. So from the standard restructured book, we had a fall of 2,232 crores, and other standard accounts were about 10,998 crores. Coming on to capital adequacy, the bank was having a capital adequacy of 12.2%. For this quarter, when we do, it is at 11.25%. Certainly, we expect certain capital infusion from the Government of India. The bank at present may look not worse off in terms of capital, but as a big player, somebody who has to participate when the economy starts moving, be an active player in the lending side of banking. I think we need some capital infusion, which I'm hopeful will certainly happen, considering the DNA of the bank. The bank has, added a lot of branches during the time. Today we have 6,700 branches and almost 9,000 ATMs, and 1,000 ATMs in the city of Delhi alone. There has been, on the global network front, we have added an office, rep office in Dhaka, Bangladesh, very recently. And as of today, the Government of India continues to hold 62.1% of the shares, and FIs around 12%. The bank has been an active player in the other, the national schemes, that are being launched. There has been a huge drive on the digitalization front. A lot of initiatives, a lot of products, a lot of services have been unleashed during this period.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.